Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
I won't spend time on this, but if you want to grab this and take a look at this, this is what I refer to as a symbiotic relationship, or what was the single currency zone argument. When China was shipping everything to us, we were buying all the stuff. They were buying treasuries, subsidizing interest rates, and back. Well, the change is right here. Credit crunch. Credit expansion's gone away. The U.S. consumer isn't buying stuff. Therefore, this whole symbiotic relationship is broken down. China isn't shipping stuff, so China is now relying on its government to stimulate their own economy. And again, you see that relationship here. The U.S. isn't buying as much stuff. They're not spending that money on imports, and they're saving. That hurts China. It tends to hurt our GDP. But if you look at it from a long-term basis and the ability to really have a pool of savings to pay back some of that debt, where the public sector, the government's throwing debt in the market, the private sector is starting to save to counteract that move. So that in and of itself tends to take a little bit of sting out of all that debt being thrown in the market on the public side of the fence. So where are we here? This is the U.S. dollar index now. We put a bottom in here in March, actually, of 2008, when sideways. Dollar took off on that credit crunch. Credit crunch really became a fear factor right here. The dollar took off, as world reserve currencies do when there's major fear in the world. We've come all the way back and retraced 61% of this move. Now we have this idea of reserve status concern in the market. Whether it's real or not, it's definitely a sentiment factor. And the dollar right here could be at a territory where if it slips right through this support here, it could go down, test the lows. But guess what we have on the horizon? The question of whether or not China's growth is viable and whether the stimulus is for real. So I think we're very much at a zone in which we could see a powerful move up or a break to new lows in a very, very big way in here. And as Steve and I talked about, the U.S. dollar has really been going sideways in here, the other currencies too, and it's creating it's creating some real power. And when you see this type of sideways movement in currencies and they break out, they usually have power one way or another. And I think depending on the way they break, it'll either add momentum to this idea of reserve status, or really I think it'll take it off the table, because I think this move would be based on the idea of China weakening or concern in the Chinese economy going forward and their future growth pattern going forward, given all the stimulus they have, and the U.S. starting to save and actually rebuilding the country's balance sheet beside the consumer balance sheet, which ultimately could be very good for the U.S. dollar. So that's my story, and I'll take all the questions, or as many as I can afterwards. And Steve, over to you. Hopefully some of that made sense.
Thanks, Jack. Let me just grab the ball here, and then I'll talk a little bit about FX options. And a lot of questions are coming in, which is great. So we'll ask Jack as many questions as we need to. Please type them in now. If you're thinking of a question, type it in, and I'll relay it to Jack. But let me start talking about FX options. As Jack was saying, one of the benefits here is that you can have a view on the dollar and play it however you like, whether it's the simplest way, looking at buying a call, buying a put. Buying a call, of course, would be bullish U.S. dollar. Buying a put, bearish U.S. dollar, relative to 6, or actually we have 9 currency pairs now. They're all dollar relative, and again, it's what is the dollar worth in another currency. So you would type in your symbols. You see them there on your screen. The most popular one is going to probably be the second one, the Canadian dollar, U.S. dollar Canadian CDD. followed by the euro, which is interesting. I guess we're having a lot of Canadian people, either Americans or Canadians, that do business, either way, Canadians in the U.S. or Americans in Canada, a lot of interest there. So we see that as our most popular one, followed by the euro. And then all the other ones there, you see Japanese yen, British pound, Australian dollar, Swiss franc, and then the new ones, New Zealand dollar, Mexican peso, and the Swedish krona. Just a little bit about the trading convention. You might be used to seeing the euro trading $1.41, $1.42. Well, we at the IAC are trading the dollar relative version of that, so the dollar is the base currency. So if you take the dollar as the base currency, you come up with a number, and that screenshot there would be 69, with the dollar euro being like 143 or something like that. I don't know the exact math, but you could just take the inverse of the dollar as the counter currency, and at the IAC we use the dollar as the base currency, and you can calculate $1.18 for Australian, $6 for Swiss franc, 59 for British pound. And again, this is taken about 3 weeks ago, with the dollar at about its weakest point. So you could do that math, and I just wanted to show you there that it's easy to do. You can look at the opposing convention or just the basic convention. The features of the IAC FX options, they're options on the U.S. dollar, so it's options on the exchange rate, dollar-based, 50-cent strike prices. The premium is quartered in U.S. dollars. You can trade this right through your equity options broker. They're cash settled. They're available, as I said, through your broker. Like last week, we had TradeStation with us. So hopefully many of you went and checked out Stan Dash. He did a great presentation, and if you don't have a broker, TradeStation might be one broker you might want to check out. Well, the next broker coming on board, I believe, is Trade King in a couple of weeks. They'll be with us at the ISC. We have market makers that quote all the different currency pairs and the different strike prices. Trading hours are 9:30 to 4:15. So what would happen over the last year? I think a lot of you know this. We'll just take a, let's see if I can find it. For those of you that believe in technical analysis, you might say, okay, well, we see sort of dollar rally pretty strongly here through last winter or early last winter. Then after that, the dollar, again, I'm looking at dollar CAD. The dollar went into a neutral trend. The neutral trend lasted many, many months here, if you will. And then we broke down. Interestingly enough, we just got up against the old support, and then we faded back down again. And now we are, continuing to sell off, although there is a minor base building. If you look at dollar euro, pretty similar. We saw a dollar rally, and then we're sort of a basing, and we're in that sort of that formation today. Most importantly, this is all nice, but what do you think in the future? And that's the idea of trading the currency options, is you can have a view whether you're bullish or bearish. If you think the dollar is going up, well, there you go, call options. If you think it's going down, put options. Same thing here in the euro. Call options, put options. So here, this is a screenshot as of this morning. And since the credit crunch has eased a bit, we noticed that, well, the top, of course, if we had known this was the top in March, well, what we would have known what to do. We would have bought put options, probably some maybe 120 puts, because once we broke through 120, we're sort of off to the races here, down to 107. If you had bought any of those put options, you would have done very, very well. Of course, you always need to think about the limited risk that the options offer, and that's one of the major benefits, that we have limited risk. And again, this was the chart as of this morning.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.